Welcome to the SeizeYourBusiness.com podcast and video blog. My name is Kevin O'Flaherty from O'Flaherty Law, joined as always by my co-host Jim Wazak. Jim, tell everybody again what you're doing these days.
Hello out there, everybody in television land. We are now selling supplemental cancer insurance. If people get sick with cancer, there's a lot of bills not covered by the standard medical coverage. Our policies step in and pick up a lot of that. And what's nice is if you never use the policy, you eventually get all your money refunded.
All right, and our guest today is accountant Bryan Kmetz, and he is going to talk about tax planning after the year ends. So thanks so much for being here with us, Bryan.
Thank you, Kevin.
Yes.
Tell us, you're in a very unique position because you do a lot of the business end of things for your own firm, right? And so you're both kind of a business owner and an accountant.
That is correct. You know, a little bit of our background. I'm in a family-run accounting practice in Willowbrook. I've been working for my father for 20 years, and my nephew is now working for us. So we are a multi-generational family business with over 65 years of accounting experience.
Mm-hmm.
So what makes you, what's your sales pitch when you're, I'm sure you probably don't think of it as a sales pitch, but when a client says, what makes you awesome at what you do? What's the best thing about it?
What makes you awesome? I think I hear often that I'm not the typical mold of an accountant. And that is that I enjoy taking part in clients' businesses, helping them grow, and figuring out how to manage their cash flow, you know, through tax planning. Not just doing the tax planning, how do we minimize taxes, but how is your business doing day in and day out? And I kind of bring on a personal relationship and kind of take that business on our shoulders as well, because we want to see our clients succeed, and we want to be a part of that success.
That's actually a really good service that I was just talking to my office manager today, that we get our QuickBooks file together at the end of every year, give it to our accountant, and do our taxes, but we don't have the analysis throughout the year, and that's something that's really hard for a business owner to find time to do and build processes for. So we are going to be talking right after this episode, but
right.
That's a great service for a business owner.
So Brad, let me ask you this question. So, I mean, a lot of people start out, you know, they're entrepreneurs. They maybe just have a checkbook. Maybe they go take it to, you know, H&R Block or somebody like that. What are the signals that an owner should look for that maybe it's time to move over to somebody who can really give some business insight other than just prepare tax return?
I would have to say, you know, some of the signals are, what are your objectives and what are your goals? And are those being met on an annual basis, quarterly basis, or monthly? Mm-hmm. That's the approach we take with our clients. Well, how often do you need service, and what are you trying to accomplish, not only through your business, but also your personal return? Because most small business owners are a pass-through entity, S corporation, partnership. And so how is that impacting your personal taxes? And so taking a look at that big picture, you know, is the question you have to ask, and are those needs being met? You know, so question of, okay, am I just having someone prepare my return, or am I getting useful feedback from a professional that has an understanding of my industry and also an understanding of taxation and tax planning?
So what type of things in that throughout the year feedback, and we'll get into our topic in a second, but sometimes I use these episodes as initial consultations for myself.
Yeah.
Sure.
Yeah.
Right.
Okay.
But so what sort of feedback do you give people throughout the year? Is it here's where you're spending your money, the categories, and how much you're spending in each category, and here's where your money is coming from, or how?
It's kind of you take that approach of, what are my tax implications going to be? And is minimizing taxes your ultimate goal, or are you looking to needing financial aid for school and for education? And so when you take a look back at the business return, you do a year-over-year comparison. We try to see trends. If your income's going to tick up, is that pushing you into a new tax bracket? You know, and if so, what are we going to do to minimize taxation? That tends to be everyone's goal. How do I minimize my taxes? Am I taking advantage of credits that are out there? Am I maximizing my contributions to retirement accounts? You know, things that can be done throughout the course of the year, but also after the year has ended. You know, your SEP vehicle is a good vehicle to still put money away to minimize your taxation. Are you taking advantage of such things as the domestic production activities deduction, which is a mouthful, I get it, you know, but it's basically, if you're a manufacturer, there are credits that are available to you. There's also worker opportunity credits. Are you hiring an individual that has been currently unemployed for a certain period of time? There's credits there. So it's taking a look back and making sure you're using the resources that are available to you to minimize your taxes as a business owner.
So you should do two types of planning with your accountant, right? You should meet with them, kind of at the beginning and throughout the year to say, here's how I can change my behavior throughout the course of this year to impact this year's taxes, before the fact. But what we want to talk about in this episode is I've already committed the sin of not meeting with my accountant all year. I've got my QuickBooks file. Now 2016's over. Now what can we do about 2016 taxes at this point if we sit down and plan with you?
If you're looking at this point of the year, December is come and gone. You're into 2017. One of the big advantages, or should I say one of those big deductions that's still available to you, is that SEP contribution or retirement contribution for a self-employed individual. Depending on what type of entity you are, determines the amount that you can contribute. For example, S corporations, partnerships, it's based, or not partnerships, but S corporations are based on compensation. Sole proprietor or self-employed individuals based on the net income of their business. You could still set up the SEP and you can still contribute to it after year end. That's a big vehicle. The other one is taking a look back at your assets that you purchased in 2016. Are there depreciation that's available to you? The bonus depreciation or Section 179. I can get into the weeds of what those mean, but that would take more than the time we have here.
Can you explain kind of briefly how depreciation works and what it is? Because that's something that's kind of hard to wrap your head around.
Okay. Depreciation is the value of the asset and taking a certain expense for it every year over its useful life. The useful life is defined by the IRS code, depending on the type of asset you're putting into service. So, for example, office equipment. Different pieces of equipment have different useful lives. The IRS allows what they call Section 179, which is quick depreciation. So if you purchase something throughout the course of the year, you can take maybe full depreciation depending on your income of the business. Then you also have bonus depreciation. IRS allows for up to 50% of depreciation to be taken in the first year, and it allows for you to be able to take a I don't want to get into that. Sorry. Well, but you get into the bonus depreciation. There's a couple different depreciation vehicles that are available.
Okay.
Let me try
and don't be afraid to get wonky in this
Yeah.
podcast. We like to get into the details and actually give people stuff that they can use.
Wait a minute. Wonky, is that a word even? I don't think that's even a
Isn't
word.
wonky like when you're getting really into the weeds?
Into the weeds, into the minutia. I don't want to.
But you know what? For the benefit of our viewers and listeners who aren't accountants, let me simplify this for you.
Sure.
Depreciation is like when you first get married, and then over time your wife's affections for you depreciate. That's what depreciation is.
If you could write that off, that would be great.
Right.
But I don't think you can.
Brett, let me ask you this question. Our people really love to hear stories. Is there a story you have of somebody who maybe you started doing their accounting after they were in business for a few years, and you look back and say, oh my God, here's tens of thousands of dollars of deductions you couldn't take. Have you find situations like that where people just miss things?
It's always interesting that you ask that question. Every tax season.
That's why we're the MC.
Yeah, exactly.
We ask
every tax season, the major news networks will go out and they'll take a tax return to 5 different preparers and you'll get 5 different answers.
Yeah.
And that is the complexity of the tax code. Is how are things interpreted and where have deductions been taken or missed? And it comes down to the resources that are available. I'm not going to sit here and preach that I know the entire tax code. That would be impossible. But do I have the resources to go and find out? Okay, here is the tax return from previous years that you're presenting to me now. Let's say you're a new client, you come in the door. Let's take a look at it and see. Okay, have I been maximizing the deductions that are available to me? What type of business are you? That covers the domestic production activity deduction. If you're a manufacturer, film producer, if you are a seller of manufactured goods, construction companies, there's a deduction out there for you up to, there's different methods to calculate that deduction. Same thing, won't get into the weeds on that, but are you taking that deduction? Are you hiring individuals that have been previously unemployed for a set period of time? So those are the different things that touch a lot on the small business. Okay, and then you've got to take a look and pair that with their personal return. What deductions are available for you there? Are you maximizing those? And there's a lot that comes into play there, but it's a balancing act, and it's taking a look at the full picture, not just the one component of the business, and making sure that we're maximizing, those options and minimizing taxation. Again, if that's your goal.
So a lot of people, when they think about doing their taxes, think about bringing like a box of receipts to their accountant, you know, and we're in an electronic world where we can get everything off of credit card statements. And if someone hasn't been doing any planning throughout the year, they've just got their QuickBooks file and it's up to date, and they give that to you.
Right.
What does the process look like for you to investigate what their year was really, and what deductions they can take? What does the process of working with you look like?
Okay. It's great that you say that, because we still get documents in all shapes, ways, and forms. Boxes to QuickBooks to files drop through Dropbox, you name it. We're getting documents in so many different methods these days. I caution, and this is based off of communications with examiners from the IRS, you still need your backup documentation. Okay? As a preparer, this day and age, it's impossible for me to go through all of your stuff and go through a box of receipts. There becomes a certain level of, okay, if you're using an in-house bookkeeper, making sure that they're putting things kind of where they need to go. We'll review and look through those categories to make sure that they're accurate and they're reconciled, you know, correctly, but making sure that you have every single receipt, we kind of make sure that the client understands that. However, going back to the examination thing, the IRS still wants to make sure you have those receipts. A credit card statement is not sufficient support documentation for an examination.
Really?
They need the actual receipt. Okay. And there are different time frames for how long you have to keep certain records. You know, same thing, long list of 3-year, 5-year, 7-year, or indefinitely. And, you know, feel free to give me a call and we can give you that list.
How do business owners do that practically? Because, you know, like for our business, we have, I don't know, 6 different people out there spending money in our business. 6 different people with credit cards. Do they just keep a shoebox basically full, drop the receipts in a shoebox, and if they get audited, then they'll organize the shoebox? Or
It depends, you know, because when it comes down to an examination, we're going to bill based on our time. And so if we're going through that shoebox, organizing, reconciling, there's going to be more time. If you have it organized, you know, individual envelopes inside that shoebox, that's great.
So by month or something?
By month, by category, you know, works out well in that. So, but yeah, you're going to recommend keeping the receipts.
You really you harshed my buzz there, Brad.
Yeah.
Well, unfortunately, you know, we had an examination that we represented clients for this year, and the individual that we met with from the IRS said, you know, we're still looking for these items, and that the credit card statements are not sufficient.
Wow. So to kind of steer back to the
Sure.
main body of the topics, you talked about, you know, retirement account contributions is one thing you can do after the fact, industry specific. Basically credits or however you accountants put it,
Right.
And depreciation. What are the other big things that a business owner should be thinking about at this stage of the game, or do they just meet with you and let you think about it?
Well, that's part of it. Yeah, they meet with us and they let us think about it, and that goes into, you know, when we bring on a client is, you know, at least at a minimum trying to do quarterly consultations and taking a look at the ones that we talked about, the retirement contributions, the credits available, and depreciation, make sure you're maximizing that there. Those are pretty much where you're at this point in the game. You know, but now it's preparing the return in a timely fashion, because here we're already in February almost, and trying to make sure that we're ahead of the curve for even 2017 planning. Okay, are you going to be required to make estimated payments? What are those amounts going to look like? You know, so that you can, you know, have the cash flow there in a timely fashion.
When are you required to make estimated payments as opposed to just doing annual taxes?
Estimated payments are due quarterly. You know.
Oh, I mean, what sort of businesses are required? Is it an income threshold, or?
It is based on the income threshold based off of your personal return, and depending on what type of entity you are. You know, so if you're a pass-through entity, it's going to go back to your income threshold and your tax threshold on your personal return.
Okay.
And then you're going to be making them at the personal level. If you're a C corporation, which is not a non-pass-through entity, they still also have tax liability thresholds that they have to meet, and paying those taxes in on a quarterly basis to either the state or to the federal government.
Is it based on the previous year's return, or is it based
Correct.
on? Okay, so you'll tell me if I hit, you know, if you're my accountant, you'll tell me, all right, next
Right.
year we got to do this quarterly.
Correct.
Okay. Do people do it quarterly voluntarily sometimes? Do businesses do it voluntarily quarterly? Do people almost universally do it yearly if they can?
Most people, depending on the mechanism or the vehicle, you know, so if you're a pass-through entity and you're on a W-2, generally your wages and your federal income tax are meeting your deposit requirements or your tax payment requirements. If you're a business, that vehicle becomes then, like we were talking about, the quarterly payments. And that's going to be based off of the prior year tax level. And then you're going to be required to make those. If not, you're going to be considered possibly in a penalty situation come filing time for this year. And that brings me to one note. For this filing season for businesses, partnerships moved up to March 15th. Previously, they were April 15th. And that, but in order to allow people the opportunity to get their personal returns done by the April 15th deadline, they moved the partnership or pass-through entities up.
So that includes S corps and LLCs.
S corps have been a March 15th. C corps were March 15th. They have now actually moved back to April 15th.
Okay.
Since they pay taxes at the corporate level.
Well, that's good to know.
So let me ask you this question. So if somebody, a lot of smaller businesses are like subchapter S corporations.
Yes.
Is there a formula you use, assuming they're profitable, in terms of how much they should take as salary versus, return of capital or whatever? Are there any guidelines for that?
Can I lay out a little context here? So for subchapter S corporations, you only pay self-employment tax on your salary. So you can take profit free and clear of self-employment tax. So I always tell people to talk to your accountant about what you can get away with, how low you can get away with paying yourself a salary, because you want to make it as low as possible because that's what you're paying self-employment tax on. So I think, is that kind of what...
Yeah, that's what I was trying to ask our guests.
Yeah, I just want to make sure we have some context on why you're asking the question.
It's an interesting question because there are IRS guidelines that they like to see of a ratio of compensation to draw or distribution. As Kevin touched on, compensation is taxed for self-employment tax. A draw or a distribution is not. However, it's still included in your net income of the business, where it's going to get taxed for federal and state tax purposes. Goes back to that SEP contribution, IRA or SEP contributions. It depends on what your goals are. If you want to maximize the SEP contribution for 2016 is $53,000, it's based off of compensation. Compensation of an S corporation officer or shareholder could go up to 25% of, I think it's 275,000 or 260. I can't go figure. I can't do the math in my head. Whatever 25% is to get you.
We have accounts for that.
Exactly. We have accounts for that. But anyway, so that depends on what your goals are. Do you want to show more compensation so that you're maximizing your contributions into those retirement vehicles?
Okay.
Or if you're trying to minimize self-employment tax, where's that threshold that the IRS has established that you can, your minimum compensation to make sure you're meeting their guidelines?
Do you have like a resource you can go to say, all right, for example, yourself, you're the owner of an accounting firm, but you're paying yourself salary to work as an accountant in that firm. Here's what an accountant should make in salary, or a reasonable salary to pay an accountant, or a reasonable salary to pay an intern.
It's funny that you asked that. I have two sister-in-laws that work for Career Builder, and that. So whenever I have a question of, what are the average salaries for people in this profession, in this area, I'll shoot them a quick email and they'll get back to me.
Okay.
But there are industry reports out there about average salaries. You can go on to salary. I don't want to, pump up another website, but I think like salary.com or something like that. You can go and find out what your average salary, should be. Have we crossed as a practice, a examination that said, as an industry, you should be taking this as payroll? No, we haven't, because the formula that we generally have seen is a combination of what compensation plus your net income plus your distributions that you're taking out as a S corporation individual. The formula is based off of those components, and they want to see a certain percentage coming out as compensation.
Okay, so it's not based, and you just blew my mind here. So it's not based on industry average what you should pay the salary. It's based on kind of a percentage of your total compensation that you say, they're gonna flag this if it's if you're taking a ton of profits as the business owner and not.
They would still like to see that it's reasonable. That's one word that is used quite often. But as far as our practice goes, I have not had a return come back and say your compensation of your officer or shareholder has not met a sufficient amount for that industry. They have not taken it down to an industry level yet.
Okay.
So does it exist? I'm not quite sure. I'd have to find out.
That might be maybe a counter argument you make if you're compensating yourself too low of a percentage to say, the business is really successful, but this tax I'm paying is for working in the business, and here's, I'm paying myself industry average.
Right.
All right, well, thanks so much for sharing
You're
your
welcome.
wisdom with us
Thank
today.
you for being with here.
How can people reach you if they need a great accountant?
All right. Well, great accountant. Appreciate that.
Yeah.
The name of the practice is G. James Kmetz CPA, and we are located in the Community Bank of Willowbrook, which is on the corner of 63rd and 83. Can reach us by phone. Can reach us, on the web at kmetzfinancial.com.
What's your phone number?
Phone number is 630-325-1527.
Okay.
And email is bkmetz, Kmetz, at kmetzfinancial.com.
Okay.
It rings off your tongue when
It
you
does.
say
It does.
So
I've worked with Brad on several clients together, and he really does care about his clients' well-being, and he's very meticulous. So I give him a ringing endorsement. I'd highly recommend him.
Okay.
to
How do
all my
people
clients.
reach you, Kevin?
630-324-6666 is our phone number. We do free consultations in nearly every area of law. I handle all of our business law personally, so you'll be dealing with me if you're a business owner. Love to talk to you. Jim, how can people reach you?
630-272-3895. 630-272-3895.
Check out more of our videos, podcasts, and articles at seizeyourbusiness.com. You can check out my legal video blog and podcast at learn-about-law.com and our makingrealestatefun.com podcast and video as well. We're all kind of in the same family here. I want to thank Tom Weiler from Weiler Studios for doing our video. If you're a business owner and need videography, he can certainly help you out. WeilerStudios.com, and that's Weiler with a Y. Thanks so much for listening.
Thank you.